It's your money and your money matters. For the best advice to help you succeed, turn to Give and John. They know what you need to make the right financial decisions. Turn your radio on and listen to Give and John. It's your money and your money matters. It's your money and your money matters.
Welcome to Money Matters Minute. I'm Gib McEachran.
I'm John Hardy.
Before we start talking about what we're going to focus on in the second quarter, we'll let John talk about what we've done in the first quarter.
We've just gone through a first quarter review of all our assets and asset categories, and it was really interesting what we discovered. We saw and reviewed again that the large cap value, those things that pay dividend, had been the leaders in the first quarter of this year. Mm-hmm. We also discovered, interesting enough, that small caps and mid caps are beginning to pick up speed, and we're beginning to reevaluate how we begin to build back into those. Because as you remember, we have moved clients away from that category, and now we're moving back into that category. Large cap growth is kind of a silent category at this point in time, and we spent a great deal of time reviewing the providers who we put into those categories and getting the bench, the lineup of who we choose correct, and I think we got a pretty good position.
I do too.
So we freshened up the portfolio. We have decided what areas to push and to overweight as we go into the second quarter this year. And really, at this point in time now, we're going to be looking at the three items that you're talking about.
That's right. So we're going to focus in the second quarter on the Fed and interest rate increases if they do actually occur. We're going to focus on oil. And then most importantly, as we enter the earnings season, which really kicks off April 11th, we're going to be looking at earnings and if they're going to be bad, good, or indifferent.
Let's talk real quick on maybe a top 2 or 3 things of each category.
All
Will
right.
the Fed go up in interest rates? Well, we went into this year with a proposed 4 increases in interest rate.
Right.
I don't think that's going
No,
to happen.
I would be surprised if we saw more than one.
Okay. 1, 2 at maybe, but I agree with you, probably 1 is better. That carries into 2017 with 1 or 2.
Right.
So rising interest rates are not going to be an issue in which I think the market is going to be worried about. However, don't you know that they will be focused on what the meeting's minutes will say?
They'll look for that transparency. They'll dissect every word and parse out what they believe is going to happen, they being the pundits. But with the interest rates not going up, that means the dollar is going to strengthen, and it's going to help the next 2 items we're going to talk about. That's oil and earnings.
Finally, at this point in time, oil has uncoupled from the stock market, meaning it's separated. We aren't in lockstep with the S&P 500 and oil at this point in time. Now, that's not to say it couldn't get back and get in lockstep. Oil could swing both up or down based on a lot of issues. Supply is one of them.
Supply being one, and terrorist activity being another, and whether or not the Arab countries and some of the other oil-producing countries will freeze the output as it is today, because a lot of the firming up of oil has been based on a freeze occurring sometime in the near future. If that doesn't occur, that could cause oil to drop in price
That's right.
again.
But if we can get stabilization somewhere in the high 30s to maybe high 40s, that $30 to $50 range, if oil can get stabled in that area, I think then the market would react positively.
All right, and then finally earnings. So what we're going to be, again, as I said, April 11th is the kickoff of earnings season. What we're looking for is that earnings are going to be for the 3rd quarter in a row in a losing type of situation. Down 7% year over year. So that would be 2015 to 2016 this quarter. Last year, a 7% decrease. But some stabilization is expected, and perhaps what we'll be looking for is what the outlook is for earnings, or what those companies are saying ahead into 2017.
So we'll have to watch and see where that along with elections will be kind of the wild card for
that.
this
And the
year.
strengthening dollar will help those companies that are exporting. So that's really what we're going to be watching for the next quarter. Stay tuned. We'll be in communication with you and let you know what's going on. Because always remember, it's your money.
And your money matters.